Welcome to 10, the Tenant Experience Network podcast. I'm your host, David Abrams, and in each episode, we bring you conversations with leading CRE industry professionals and experts who all have something to say about tenant experience and the future of the workplace. In today's episode, I'm thrilled to be joined by James Nelson, a Wall Street Journal bestselling author, podcast host, and investor. James is also the principal and head of Avison Young's U.S. investment sales group in New York City. James shares his journey from an English major at Colgate University to leading Avison Young's U.S. investment sales team, offering invaluable lessons on team building, market adaptation, and embracing technology along the way. We explore the post-pandemic real estate market, discussing opportunities like residential conversions, the impact of technology, and the shift toward a tenant-focused office sector. James also highlights his vision for greater transparency and collaboration in the industry, as well as insights from his book, The Insider's Edge, aimed at empowering real estate investors. This is an episode filled with actionable insights and big picture thinking about the future of real estate. Let's dive in. And now I'd like to welcome James to the show. I am really glad you could be with us today, and I'm looking forward to our conversation.
David, thank you so much for having me, and always great to spend time with a fellow podcast host. I know how much time and effort, so a thanks to your team and your partner, and for all the great content that you put out. So thank you.
No, appreciate that, and we'll see if the roles get reversed at all during the point where all of a sudden I'm the guest and you're the host. We'll see what happens. So let's start with your journey to your current position role. Let's go way back, not too way back, but how did you get started? How did you get started in commercial real estate? Was there anything before? And tell us about your journey in commercial real estate.
Sure. So it was definitely luck from the start, in the sense that I was an English major at Colgate in upstate New York. I knew very little about real estate, but fortunately, one of the alums, Paul Massey, had posted a position to become a sales associate. And at this point, all my friends had investment banking jobs, and I was really scrambling late into the spring to find a job. I thought maybe I was going to go out to the West Coast and try to make movies or something like that. And I quickly found out that no one was paying me to do that. So I said, all right, I better go get a real job. And so I come to New York, and I will say I had a really great gut feeling about the place, just great people, and seemed like a great opportunity. And lo and behold, they called and offered me the job. It wasn't until several months later that they told me that only 2 people had applied for the job, and I was actually their second choice. So we always joke that I started with very low expectations. But fast forward, 17 years later, I was a partner at the company. We sold the Cushman and Wakefield, had 3 incredible years there, and then was given an opportunity to build out the investment sales team here in New York for Avison Young, a little over 7 years ago. So, focusing on investment sales in the New York tri-state area, the major food groups, multifamily, office, development, retail, a little bit of industrial. And now recently, as of the beginning of this year, became head of U.S. investment sales to really help elevate the sales that we're doing across the U.S. Now, Avison Young, we have 120 offices around the world. We have 60 here in the U.S. And what I'm really helping us do for our clients' benefit is to focus in on the top 10 markets, New York being certainly one of them. But again, to help with our sales, investment sales business in these major markets, and having a lot of fun so far.
Well, congratulations. Quite a journey, and congratulations on the new position, the new role. Of course, Paul Massey has been a previous guest on the podcast. Loved connecting with him. So you're in great company. Just tell me a little bit about why you think you were so uniquely suited for this position. Perhaps an English major, maybe you had different plans initially, but obviously you gravitated towards this, not only the New York as a destination, but also the position. Why do you think that has worked for you?
Yeah, well, I love certainly brokerage and the sales aspect, and just learning new things every single day. So, after being in the New York market for 25 plus years, I've really enjoyed the opportunity to learn other markets and to bring that expertise and share it across the country. Um, but I'm also, in addition to the brokerage piece, I'm also really passionate about building teams, and we're very proud of the team that we have here in New York, and we've got great people across the country, but looking to build on that as well. So there's certainly an intellectual curiosity piece to it. I think, regardless of what you're doing, you want to be a lifelong learner. And I think this new role is also giving a lot of perspective. So even as I continue, New York continues to be a really important market, but it's been interesting to bring back what we're seeing in other markets, and not just across the U.S. I mean, I love visiting Toronto. We're a Canadian-based company. That's where our global headquarters are. And so you see things and you pick up along the way. And I think it's really helpful when you're advising investors on how they should be, what they should be thinking about for their business, and really trying to always keep them stay ahead of the curve.
Yeah, yeah. Well, listen, thanks for the shout out to where the company originated and the Canadian roots. We're good partners. We just have to remember that. We
Yeah,
won't get to
for sure.
politics, but we
No
believe we are
elbows here. No elbows.
no politics here, but we believe we're great partners.
Good.
I've had Neil LaShure on the podcast. I've had Sheila Bodine on the podcast.
Yes.
So great representation from your company, and I'm glad you're able to lend your voice to the conversation today, and certainly through the lens that you're so deeply embedded in from in terms of transactions, in terms of sales, in terms of what people are buying and what people are selling. So pretty exciting to have you on the show. I'm super interested in commercial real estate and how it's evolving, how it's responding to the emerging needs of people in buildings today, how technology is coming into play as an accelerator of providing great service, great experience, and helping to make what we call places destinations of choice. We really believe that that's at the root of what will continue to bring people back to the physical workplace. We don't believe, you're in the space business any longer. It's not, you just don't rent space. It's far more than that. And I think the winners in our industry are going to be the ones that understand this new transformation and understand that it's going to be this sort of the way in which experience and workplace design and functionality, how all of these points intersect with each other. So I'm just curious, through your lens of someone who's out there buying and selling, how are you seeing the real estate industry respond coming through COVID and into this sort of this new world, in particular, this transformation? Any insights that you can share with us at this point?
So, and David, would you like me to speak specifically about kind of just the market macro, or are you talking about how the business has evolved from a technological standpoint?
Both, and certainly through that New York lens, which you are so intimate with, but also now with your larger perspective across the country.
Sure. So, as far as where we are in the market, because I really think this is a very opportunistic time. There's certainly a lot of uncertainty, and that has clearly been we've been up and down the roller coaster, so to speak, since the pandemic, and coming out of 2020 and wondering what is the future of office, return to office, going to look like. Getting in a better place there, finally building things back in 21, where suddenly we were transacting again. Debt was plentiful and very inexpensive, and that really fueled a lot of sales activity and investment. And then, mid 22, when rates started going up at an unprecedented level, what that did was it just created really the uncertainty where both buyers and sellers alike just didn't. When there's uncertainty, I think the tendency is just to take a step back and move to the sidelines. And so unfortunately, what that meant in New York in 22 and 23 was that sales volume here was only about a third of the 10-year average. Now, that's the major food groups, so multifamily, office, retail development. And then finally, last year we saw a pickup in dollar volume activity, but it's still only half the 10-year average. So, that has been tough. Certainly, if you're a broker, if you're a technology provider, and you're looking, for investment and transactions. it did seem like we were finally turning a corner here in the U.S. We got a rate cut or two, and
Right.
uh, looking forward to getting things kind of moving again. And then, a couple of weeks ago with all this announcement with the tariffs, it's like we're back on the roller coaster here. But it is, you know, the market itself, and I know you all do a great job with your technology as well, and just trying to inform our clients how to stay ahead of the curve. It's certainly in greater demand and need now than ever. I think there's a lot of uncertainty out there. So where you can help provide advice and clarity, I think it's very important. So as far as the technology advancements, and it's funny, I just got back from guest lecturing at Columbia and
Okay.
talking about how, in many cases, brokerage has changed very little in the 25 years that I've been doing this. I mean, there's certainly brokers who are leveraging technology and investors as well. And there's still a lot that still kind of use the old, school, analog version, if you will. And so I don't know. I think that creates opportunities. I think those who adapt, and I think those who are certainly leveraging data. I know that's our company has
Right.
been very um, uh, big believers in not just you know leveraging the data, but really making it actionable. So
Right.
kind of looking through, and there's so much data out there. It's okay. How do we make the best informed decisions from it?
Right. When you're talking to potential clients, particularly on the acquisition side, and they're touring buildings. First of all, what are they looking for, and is what they're looking for different from Class A to Class B to Class C? What is driving their investment decision today? We are seeing. I mean, we have clients that are still acquiring, and I think obviously there's always a market, and there will always be transactions. You see some building owners giving the keys back to the bank, and at the same time, they're out there buying through another fund. What is motivating the buyer today, and what kind of questions are they asking? Are they any different than they were perhaps pre-pandemic?
Well, I would say if we're talking about office,
Yes.
the buyers, the investors today are really just looking at basis and value in large part. And it's really interesting to see that here in the US, over 50% of the buyers have been on the private side. So it used to be really the institutions that, we talk about the drop in sales volume and activity. The institutions really drive the dollar volume, but a lot of them have been on the sidelines,
Right.
right? I mean, try going into an investment committee right now, talking about going to buy an office deal, let alone get it financed. And, so a lot of the private investors have been stepping up, but for them, they're looking at this as a basis play. If you can buy an office deal today at 20, 30 cents on the dollar,
Right.
I think there's a lot of these investors who say, even if you just sit and do nothing for a couple of years, that,
There's upside.
if the return to office continues to improve in the overall um, economy and environment, that those bets will pay off. So that's where a lot of the investment we see is on from the investor side. Interestingly, so we just wrapped up a study of the last 5 years of office sales in Manhattan. There was 184 of them since the pandemic,
Okay.
and we analyzed those sales. And interestingly, almost if you combine the residential office to residential conversions and end users stepping up and buying their buildings, it almost
Right.
accounts for about half of the square footage being
Wow.
transacted. So, and I think this is a really positive trend for a lot of reasons. One is, at least here in Manhattan, we have over 500 million square feet of office space. We have availability reached as high as 20%. That's 100 million square feet. And even if we had a great return to office, I think the reality is that a lot of this space is just obsolete. And so what do you do with it? And meanwhile, we have a housing crisis. I'm sure it's not too dissimilar to Toronto
Mhm.
and other major cities across around the world. And so the idea of to take, obsolete office and convert it to residential where it makes sense, I
Right.
think is a really great trend. And I also think companies that are being opportunistic and they're buying their own office buildings, that is That's a great thing too, because they're establishing a permanent presence, and they're also taking some of this available office stock off the market,
Mhm.
right? So it's had a really positive impact.
Yeah, that makes total sense. I read an article, I think it was earlier today, in fact, where there's now this push. There was the flight to quality. All the beautiful triple class A buildings. Everyone wanted to be in them, but we're starting to see that trickle down effect, where all of a sudden now some of the better located, better amenitized, better quality B plus buildings, that the leasing activity is starting to pick up, and perhaps on the buy sell side, I'm not sure. But what I've always felt that the world will look a little more like it did pre-pandemic than it did during the pandemic. And then, as much as perhaps a lot of the B and C inventory will not be necessary, to your point of oversupply, that there is still a place for quality boutique style buildings, just as much there is for the 40, 50, 60 floor story, brand new real estate like Hudson Yards. Any thoughts on that?
Well, I know maybe this stat is a little old, but at one point we saw that 75% of the leasing demand was going for the top 25% of the building stock, which is the Class A and Trophy. But and that was probably about a year ago. But fast forward to today, what our leasing brokers will tell you is that a lot of that space at the top of the buildings have filled up.
Right.
And so, if you want Class A or Trophy, you're probably ended up on a lower floor,
Mm-hmm.
or that's going to kind of push the demand to, non-trophy, right? And I think kind of the next choice is location. So if you're talking about Manhattan office, for example, if you wanted the trophy Class A new construction, a lot of those, companies ended up in Hudson Yards,
Right.
but that filled up. So now there's kind of this return to Grand Central. And I think a lot of the
Mm-hmm.
companies ended up filling up. One Vanderbilt, achieving rents $200, even $300 a foot. We saw some incredible rents being achieved on Park Avenue, 425 Park Avenue, amongst them. But what we're seeing is this whole Grand Central area has become very desirable as a
Right.
result of kind of, a lot of the tenant base that want to be in close proximity. And
Yeah.
that's going to help, you know, maybe not the Class C buildings, but,
Right.
certainly the Bs and the B pluses.
Yeah, agreed, agreed. To that end, I've always felt that technology can sort of be that equalizer and help position buildings, no matter what class, no matter what age, in a different light. And so, we're looking at technology now to help sort of deliver that one-stop, seamless, personalized digital experience. And, I think people want to be able to connect, use technology to connect to their building. They want to, be able to connect with one another. They want to foster greater productivity, just and help make where people live and work easier and better. So I'm just curious, from a customer experience and engagement perspective, what are your thoughts on how technology is either working and doing a good job, or perhaps where it could be doing, contributing in a more meaningful way?
Yeah, I mean, I think what you're doing for not just office space, but creating those communities is incredibly important, because that is why people want to show up to the office, is for
Right.
that community. It's not just a physical place to park your stuff. And so I think the more that you can create that engagement, I mean, the employers are definitely, that's why, clearly they want that return to office. They just know that, people are more productive, and you get that collaboration, the synergy when people work together. So to what extent you can make that a seamless experience, as you all have done with your technology, I think it makes a ton of sense and gives people a reason to want to come back to the office.
Mm-hmm. Mm-hmm. Agreed. Um, you know, this whole reinvention of commercial real estate, it's a huge opportunity for the industry. I think that, I don't know, from your experience and your years of experience, I think we can agree that it's been one of the most significant moments in time. So just looking forward and seeing the momentum that we've had coming out of the pandemic, if I were to cast, wave my magic wand, and give you resources, either a new capital budget or human resources, something to do something that perhaps you haven't been able to before, you've been constrained before. What would you do now to move your business forward, to really think in terms of next 3 to 5 years, to really increase the relevancy, the impact that you could have on this industry? What would you do that perhaps you haven't been able to do in the past?
Well, I think this new role, taking on a more national focus is really exciting, and I think I'm at a great spot to do this. Brokerage is kind of a funny business in that, and you have all different types of firms and cultures, from the small boutiques to the big global full service firms, but brokerage can oftentimes be a very siloed business where you have
Hmm.
brokers who work a specific neighborhood. That's what they do. They keep their information to themselves. That's kind of their currency. And so you don't have, the willingness, I guess, to kind of have collaboration across the company. And so what we're doing now with USIS, the United States Investment Sales Group, is that we're really trying, just like you've created this seamless technology for your clients, we want it to be seamless for investors. So if you want to invest across the country or North America's around the world, and you tell us where you want to be and what you're looking for, instead of saying, well, David, that's great. But I can help you in New York. And then you got to you could talk to this person, this market or that, as opposed to just being, plugged in immediately. That really, I think, is, the goal, right? If you're a client, you don't want to have to worry about trying to make inroads in every single market and figure out. And I think technology can certainly play a big part in it, but you have to have the culture,
Right.
because we can have the best database in the world. And we have one database for our capital markets group. So if someone wants to invest, everybody knows about it and what they're looking to do. But if you don't have that culture where brokers say, I want to share, then it doesn't work. Then it's all, for naught. So I think there is a combination. I don't know if that answers your question, but what I will tell you is that what I'm really focused on right now as we kind of build up our sales capabilities is we want to first start with research, and we
Right.
want great data, thought leadership, right? And it's a little more challenging than what you would think, because and sure, this exists with leasing as well. I mean, you have the lease comp, but what was the free rent? What was the TI? Just like when you're tracking an investment sale comp. Well, what was the cap rate? Okay, well, why? What were the lease terms? And that's always the challenge when you think about making the capital markets more efficient, more
Right.
transparent. How do you do that when the information isn't always perfect? So we think a lot about that, but right now we're really building out our reporting capabilities. You should get a great investment sales report that tells you about the trades, the major trades, who are the players. We've been tracking capital flows. We just ran a report today on where capital is flowing out of New York to what major markets and where inbound capital is coming from. And it's really interesting to see how capital is flowing all over the country here. And we'll be very interested to see how it hopefully continues to flow cross-border. Because traditionally, Canada has been a very incredible partner to the U.S. and certainly a big part of our investor base.
Right.
So we hope that continues. But that's a long way of answering your
Okay.
question. That I still I think there's a lot of work to be done to create that information, the transparency, and really helping our investors make not just the best decisions, but also really put them in the position to transact.
Right. And is that sharing of information and transparency within Avison Young, or is that between, other brokerages as well? Where do the boundaries start and stop?
Well, I think it's both, and I've got the offering, and this kind of goes back to the way investment sales business is done today. Is maybe the way it was done 25 years ago, maybe the
Hmm.
way brokers continue to operate. But it always amazed me that when you could go search CoStar right now, which I think we could all say is kind of the de facto,
Hmm.
for lack of a better word, for sales listings, the multiple listing service. I mean, LoopNet, one of their affiliate companies, is where you would go if you wanted to search for
Right.
listings, right? And it always amazed me, if you go and search for New York right now and you say, okay, show me New York investment properties that are for sale over $100 million, and you'll probably only get one or two results. But at the
Right.
end of the year, there's, 50 or 100 of these deals that trade. So you say,
Mhm.
well, wait a second. There's, could be 100 of these deals trading, but I don't see any of them. So where are they up front?
Right.
And I think, the older school of brokerage is still, I'm going to keep the listing in house.
Right.
I don't
Sure.
need to go broad with it. I know who the buyers are. Look, in some situations where a client needs to keep information confidential, I get that.
Yep.
But I still believe, and this goes back to my Massey Knackle days, that maximum exposure gets the widest audience and gets the highest price.
Right.
And no one broker knows all the buyers in the market, individuals, the companies. So yes, working
Okay.
hand in hand with the brokerage community and cooperating. I mean, obviously that happens on the leasing side, not as much on the sales side.
Right.
That would be one way. And then, the data and the way we share information about clients. I mean, that certainly is under the Avison Young umbrella, because again, if we're having conversations in LA about what, an investor is looking to do, and that is helpful when you can share it across a company platform. So it doesn't, again, feel like you're having the same conversation uh, every time you want to go into a new market.
Makes sense. Makes total sense. Well, let's hope that I think as the world, as data becomes more available, and I think as, others perhaps feel similarly to yourself, hopefully those boundaries will become more blurred, and it'll be a win-win for the industry. Let's take a short commercial break, and we'll be right back.
This episode of 10 is proudly brought to you by Hilo. Hilo is a rapid deployment workplace engagement platform for the hybrid world that enables building operators to connect to their tenants, whether they are at work, at home, or anywhere in between. We are in the midst of a seismic shift in the evolution of the workplace. Now more than ever, it's clear that the most important asset of a building is the people. Commercial real estate leaders recognize that tenants and employees want new kinds of spaces, services, and amenities to support having the flexibility to work from anywhere. Workplace engagement solutions that connect hybrid working people to buildings no matter where they are have become a major differentiator as buildings compete to retain current tenants and attract new ones. Hilo empowers building operators to meet this challenge. To learn more about Hilo and schedule a demo, visit hiloapp.com.
And now I'd like to welcome back to the show James Nelson, author, podcast host, investor, and principal head of U.S. investment sales at Avison Young. Again, thank you so much for being with us today.
Yeah, great to be back. And I appreciate the shout out on the book, because I know earlier we were talking a lot about the market and the way the business is evolving. But some things do, well, I'll get the cliche wrong, but some things do stay the same. And I think some of the principles of investing that I talk about in the book, and for so long, people always ask me, James, what's the book that teaches you how to invest in real estate? And I couldn't give them a good answer. I said, well, there's textbooks, there's the Rich Dad, Poor Dad, if you want to start out, but a book that really tells you about everything that goes into a serious real estate investment, I couldn't find anything. So,
Right.
Mid 2020, camped out at home during COVID. It's what am I gonna do? Well, I guess I'll go write a book. So I had a lot of help with my writing partner, Rachel Hartman. And McGraw-Hill was kind enough to publish this, and it's been a lot of fun. And like I said, I just got back from guest lecturing at Columbia and passed out a box of books, and it's
Amazing.
been a great thing.
Amazing. And did your podcast start in and around the same time, or what was that evolution?
The podcast actually happened before the book.
Okay.
Kind of a precursor. So originally, when I had an idea for a book, I was thinking lessons learned, from the real estate greats, and maybe I'll get around to doing that book, or maybe ChatGPT will. But I realized before I did that, you have to lay the foundation with, okay, we're going to talk about kind of mastering real estate investment. You first of all have to explain, the basic premise to it. So this book really had to come first. And it talks about, it starts very basic on the different ways to invest in real estate, not just different asset classes, but up and down the capital stack. And then it talks about the people it takes to do a real estate transaction. It talks about, how to source opportunities, how to work with brokers, how to raise capital, how to reposition properties. So again, hopefully everything, again, if you've never even invested in real estate, I think if you read this book, it'll definitely put you on the path. Interestingly, this book and the premise of and the title, The Insider's Edge, is that you can gain this advantage because real estate is still an inefficient marketplace,
Right.
right? And so, that's I mean, if you invest in the stock market, everybody has access to the same information,
Right.
right?
Yeah.
But here, the fact that there's not always great information available, that makes it more challenging if you're an investor or a broker. But if you have that inside track, you can definitely gain the advantage.
Right. Very interesting. Well, thanks for writing it, and I look forward to reading my own copy.
Good.
So 80 guests in, we've had a lot of voices on the podcast from all different aspects of the industry. But what is clearly emanating now as if it was a singular voice is this whole notion that every person who enters your building is now viewed as your customer. I think, pre-pandemic and for the longest time, it was just the person who signed the lease. That's ultimately who you cared about. And we now care about everyone. And I think this changes the game dramatically, both for the occupier, as well as the occupants, as well as those that operate commercial real estate. And I think we're finally in a moment in time where everyone understands this. And where we're drawing on inspiration, particularly in office, is from the hotel industry and the restaurant industry, from the hospitality industry. And recognizing that we have an incredible opportunity to infuse that hospitality, across the spectrum of buildings. So again, this is not reserved for Class A trophy buildings. I think that great hospitality can be introduced at every building. And I think that is going to really help continue to draw people back. So just wondering what you are seeing, wondering also what you're seeing in terms of those that are buying, and are they articulating any of this thinking? And are they, as they're considering a property, are they thinking about how they can then deliver great service to support the physicality of the offering? So it's not just space for rent, but what else about the building is going to become a draw? Any thoughts on that?
Yeah, I mean, I think that what some of the top office operator owners have determined is that they don't want to be in a commodity war, right? Because if you're just trying to compete for the cheapest rent and the most concessions, that's really challenging. I mean, you have to deliver a product and an experience that you don't get anywhere else. And I think that the larger operators really figured out to say, almost kind of taking a branded approach, where, someone knows what it's like, to be in an RXR building, for example, where we are here. I actually, on my podcast, I interviewed Jonathan Iger from Sage Hall, and same thing. They really are big into the hospitality aspect of it. And it works. I mean, it helps with the tenant retention.
Yes.
And I think that it does differentiate your product. So I think, to your point, gone are the days where you kind of see a tenant as an adversary, and I think you see them as a true partner.
Yeah.
Certainly, especially in this market with challenges in the capital markets. I mean, just try to go finance a vacant office building these days, pretty challenging. So, you've got that tenant who's willing to make that long-term commitment, and then you can, that'll help capitalize the building and, help you continue to improve the asset. And I think, that's why you see, the Class A and trophy assets outperform, because people want that experience.
I think this has opened the door for a lot more collaboration between building owner, the occupant, and the occupier, and just everyone understanding that it's one ecosystem that everybody needs to derive value from, and feel that this is a place they want to be. And I think that's an exciting opportunity for the industry. We all come to commercial real estate with different backgrounds, different perspectives, areas of expertise, all in and around office, the future of work. What else are you thinking about that I haven't addressed today that's sort of impacting, how the role of commercial real estate has continued to evolve, and how the physical workplaces could continue to evolve? We heard there's a lot of lingo, ESG, IoT. We're talking about, deriving more ROI, a lot of M&A. What are other topics that are just sort of top of mind for you as we sort of navigate the future going forward?
Well, we kind of touched on a little bit before, but I think what's been really interesting to see as part of this recovery, I mean, it used to be really the institutions, the REITs dominating the office space. And now you see a lot of the private investors coming in, certainly foreign investment as well. And they're kind of rewriting the rules with a lot of
Mhm.
these situations. And so, um, it is. I mean, yes, trends to watch. I mean, we watch where the capital is flowing from. We look at the investment activity, and unfortunately, it still feels like there is a lot of that herd mentality from the institutions. And there's rumors that Blackstone is going to make a major acquisition of an office deal in New York. I
Right.
think, that happens and that changes the narrative, right?
Right.
Because then you think in these investment committees, office becomes, an okay, an acceptable investment opportunity. So, that is the one, challenging thing. And how do we get through this when it's sometimes kind of that herd mentality, so to speak, you know, uh, has made it more challenging for the recovery, right?
Right.
So, but I think we're already starting to see signs of life. I mean, we're tracking where CMBS is being issued. I thought it was very interesting that in the first quarter of this year, um, LA had the most CMBS issued for office.
Mm.
That actually, you would think of, and then San Francisco is number two. I mean, those are really, you would say tough office markets.
Right.
The fact that now, finally it's like, okay, there's value here, right? And there's capital flows opening up. So I think that'll be an important thing to watch here, especially if we want to continue to see this recovery. We need capital invested. We need lenders who don't, feel that necessarily they're going to be under a microscope, scrutinized, for making, these loans.
So I guess it makes sense that these, family-owned, private, smaller, more entrepreneurial firms have been leading the way in terms of transactions and setting the stage for, to your point, some of these large institutions that are already creating these funds. We've read about them in the paper on numerous occasions. So we know they're there, but maybe they haven't yet transacted. But it makes sense that those smaller, family-owned, private, again, more entrepreneurial, that they're leading the way.
Yeah. And I mentioned earlier with Office, the fact that end users are now stepping up and buying their
Right.
buildings, sure, Gucci and Prada on Fifth Avenue, kind of more of a retail play, spent like $800-900 million a piece. Hyundai bought their, headquarters here in New York. But then you've got Haddad. They're in the garment business. They paid $350 million for a Park Avenue office deal, and they're going to take 800,000 feet. This is a really interesting trend. And
Right.
thinking about, typically, this dynamic of office operators and how they run the buildings for tenants. But I would imagine, with what you all are doing, if you're a company and you own your own building, how do you make the tenant, not the tenant experience, but your
Your
employee
employees.
experience better? I mean, it's
Yeah.
the
Yeah.
same thing. And now from the owner user, it's not just about making it an enjoyable place for people to come to work. You're looking for employee retention, right? Because
Right.
if you don't get it right, and then someone decides, well, hey, I'm going to go across to a competing firm or whatever it is. So I think it's really important now, for to help retain the best talent as well, to make sure that you are operating an office building and really making it welcoming and a place where people want to show up every day.
I agree. These are real estate companies that are not necessarily real estate companies that now own real estate. And in some cases, we're reading about them in the news also and trying to figure out how to get in, how to have those conversations. And I think they actually present significant opportunities for us because they are not, don't necessarily have the experience of being an operator, but they find themselves now being just that. So I think there's a lot of opportunity, and we're seeing and tracking those deals as well.
Good.
Closing speed round, an opportunity to get to know you, James, a little bit better on a personal level. So looking back, what's one piece of advice that you wish someone had given you when you first started your career?
I think to build a team earlier. I think I waited too long to bring on support. I
Hmm.
was probably, 3, 4, 5 years into the brokerage business before I really started to build out a team. And I think, if you have a belief in yourself, it's never too early. You start with an intern. There's so many people out there who want experience, right? Don't try to do it all on your own.
Right. Good advice. Is there a favorite book or podcast, not yours, or mine, that has
Yeah.
positively impacted your approach to work or life?
Well, I thought you were going to ask for the real estate business, and Trep, the Trep wire is really, I think to get a good macro view of what's going on in real estate, every week is super important. But what else? I mean, I've been listening to the All In podcast
Yeah.
recently. I love the data-driven approach to policy and just, trying to understand the issues. So I think
Right.
that's helpful. And I don't know, my podcast feed is always full, whether it's, Ed Milet, or, Tony Robbins, all the, I mean, I'm
Right.
just constantly, um, I don't want to just say consuming, because that makes it seem like I'm just sitting here with all this knowledge. I'm a really big fan of putting thoughts into action. That's a big piece of, one of my mentors and broker coaches, Rod Santamassimo.
Hmm.
Knowing isn't doing. Like, you hear this stuff, but then I'm always thinking about how am I going
How
to
can you
apply
apply
it.
it?
Yeah.
Yeah. Very good. Name one way in which technology has improved how you live or work.
I just think connectivity.
Okay.
It's really amazing to think that, you know, mid 2020, we're like, okay, what's this Zoom thing? What's
Right.
how does this work? And now we're all experts at it. And it's almost become too easy. And then, even like I had a meeting today with a New York client, and it's like, all right, well, let's just all jump on Zoom and go through the deck. And that has made it really easy to get a lot of people, looking at the same thing from different places. Like, the speed of business is happening probably 5x, maybe 10x. And now with the advent of AI and everything going on, there's still no substitute for the personal interaction. So I hope we don't lose that.
I agree, but it's the best of all worlds. That's to me where it's not one or the other. And tomorrow I have a guest coming on the program in Dubai. I'll be talking to her live from Dubai.
One.
Really could not have happened, 5, 6 years ago. So incredibly exciting, and it's just taking advantage of that opportunity.
Mhm.
As commercial real estate continues to evolve, I think the skill sets required are going to continue to change. Is there anything that you identified within the industry, even within your brokerage industry, skills that you think are going to be needed going forward that maybe again weren't important previously?
Well, I think it is really important to be an expert at whatever you do. So whether it's an asset class, a geography, uh, look, I think kind of, if you're talking about brokerage, most brokers start off in the multifamily space. There's a lot of it, but guess what? There's also a lot of brokers. And, some of these more niche businesses, whether you're a broker or an investor, and look, I think this data center revolution is really interesting. And there's not a lot of brokers out there who really have the hard technical skills to understand how it all works, the land assemblage, powering the land, so there's new categories that, even if you're new to brokerage, and if you're investing, that might be a little bit different, because I mean, these data center deals are massive. But look, I
Right.
mean, someone still has to go find the land and get it approved and entitled. So I mean, I don't know, at the risk of going too narrow out of the gate, I think sometimes, picking an asset class, a specialty that's maybe not as mainstream,
Yep.
might serve you better
Fair,
in your career.
fair enough. Fair enough. If you were not doing what you're doing right now, what would you be doing instead?
I'm very fascinated with sports agents and how this all works, especially with the advent of NIL. And I've been telling my middle son, who's a big sports nut, that, look, maybe that's something you want to think about. Just the contracts, the negotiations. I mean, it's really brokerage, but instead of
Right.
bill, it's talent. So maybe that's not a fair answer. I mean, I think this is a really interesting time, and
Right.
probably have a whole nother podcast on it. Is this
Yep.
really a good thing for college sports or whatever? But like, you have high school athletes now who are signing NIL deals, and like, who's brokering it? Who's doing that
Right.
all?
Right.
Right. I mean, it's like this whole new world that's opened up. So I'm just
Yeah.
fascinated now.
Okay. Well, and certainly connected to what you're doing from a sales perspective. Listen, James, thank you so much for joining me on the program today. Really enjoyed our conversation. Looking forward to continuing that in person.
Yes.
Coming to New York shortly, and I hope we can connect and continue to find ways to collaborate. Thank you so much.
Wonderful. This has been a lot of fun. Wishing you all the best.
Thank you. Take care now. That's a wrap on today's episode of 10. I want to thank James for joining me on the program. If you enjoyed this episode, don't forget to subscribe and leave a review. It helps others find the show. Thanks for listening, and until next time, I wish you all continued success in building community where you work and live.